Hi there, traders. This is Brad Gilbert with today's trading action. Now, just coming out of the North American session, you can see very clearly if you're up on your majors charts, we are seeing a correction here in the US dollar, a little bit of a blip down there in dollar yen and a straight back up. I think they would have thought, a lot of traders might have thought that was the BOJ intervening, but it wasn't, right? All these moves with the dollar falling across the board, right? Really good. This is like a really good thing to happen. And it really comes back down to the data, right? And I was sort of talking about this yesterday. We're looking for some key numbers here. And if I just scroll up, it's here. It's like the US numbers have been coming out weak. CPI, PCE, price index, like the whole range of things. And then we get this second, third tier numbers, like factory orders, okay? And the ISM non-manufacturing numbers, 48.8 and minus 0.5. Really weak numbers, right? This non-manufacturing number here has really put the cat amongst the pigeons and seen a really good correction on the dollar, right? And just looking at the daily charts. Now, this does a lot for us. Now, the Fed, Jerome Powell came out yesterday and was talking about they've moved to a slightly dovish stance, saying they're going to need to cut rates, before the end of the year and get things moving. So the dollar is already sort of rocking and rolling. All we need is the data to fit into place. So the dollar index, you can see it sort of just drifting back down below that previous resistance line. You got euro going back up into the range. Now we've got some really good opportunities. Aussie, we had some retail sales figures out of Australia yesterday, the final numbers. They were stronger, right? And Aussie's the first of the sort of dollar block to start breaking higher. I think we're going to see this really run. Now, don't forget, we're coming into the 4th of July, US holiday. The markets will be very thin. Now, we've got everything laid out for us. So, to me, I'm on like dollar sell watch, right? I know oil has been rallying aggressively. Hurricane Beryl sort of doing its work across the Gulf of Mexico. So, dollar CAD sort of breaking down, Aussie breaking up. It leaves opportunities here for sterling, Kiwi over the coming days, week. And even euro, right, back above 109 is not out of question. I know euro's got some geopolitical stuff going on, and that's why it's lagging the sterling, Aussie, Kiwi. But I think we are going to have lots of opportunities coming up, right? Really good signs. And now I was a little bit pissed off when I came back and saw the charts, and I went, geez, what have I missed here? And I was so fatigued, I just turned everything off and totally forgot about the numbers, right? And it's like Murphy's Law. As soon as you sort of look away, boom, there's the cash. So just bear that in mind. So tune up your charts, look for the opportunities. Now, don't get suckered into dollar yen. This wasn't a BOJ intervention. It was the US non-manufacturing numbers, which have really put the cat amongst the pigeons. It set the tone for the dollar, especially going into this US holiday, and sets us up for I'm telling you, like good trading opportunities from here. And I could like the follow on here. We get one more weak US number that comes out, and we are going to see some traffic here on the downside of the dollar. And what have we got? Well, we've got the non-farm payrolls coming out on Friday, right? Not a lot to really rip your teeth into today, as in Thursday, but you get into the non-farm payrolls Friday, it's going to be on for young and old. And like, it's going to make this number very explosive. But what we need to be doing is trying to plan a strategy around trying to get in here if we do get weak numbers. To me, it comes back to the daily charts and looking at those trend lines, but really big opportunities if we get the follow through weakness there. Like the last nail in the coffin would be the non-farm payrolls here. So just have a look at also just looking at the global markets, the movements here, like the US treasuries, the long dated bonds there, the 20-year, 30-year, really pull back, right? So to me, it just, everything is sort of lining up for a weaker dollar. I know as I said, there's a couple of sort of random geopolitical events, but you know what? Lower sort of interest rate perspective for the US, higher equity markets. The NASDAQ tech stocks have had a really good day. The Dow Jones, not so much, but we have had a very clear risk on day. Euro, sterling, Aussie, Kiwi up, and the dollar generally down, right? So that's where the action is. So coming into today's trading, like you might be like me, you might be frothing a bit, right? Ready to get into action. Just slow down, look for the opportunities that line up with what's happening on the dollar at the moment. Okay, that's the key to it. Now, unemployment figures out of Switzerland, I would be looking at all the numbers now, because if we get numbers that go with that weak dollar, and so that would be, like better employment numbers out of Switzerland, stronger industrial numbers, manufacturing numbers out of Europe. Okay, don't forget Europe's got this little bit of a tricky one. So some of the other instruments might be like easier to trade. You come down and like it's just like it's the day we want some action here. We just don't get it. There's nothing really to get your teeth into. But the trend is in play, right? The short-term trend is in play. Look at your longer-term charts. Look what's going on here on the hourly charts. Like it's almost textbook stuff. It's almost better than textbook. Like the move here on the Aussie, right? Breaks higher, hits resistance, stalls, shoots through, takes out all the stops, come back, retests, now ready to go higher again, right? And for good reason, right? Aussie data is coming in strong. The RBA said they're going to be on hold for a longer period of time. And now we've got the Fed moving to a dovish stance. The Aussie, like, to me, looks like it should be a lot higher, and it's going to go that way, right? Don't rush in just at the moment, right? We've got to try and time this. But I think we've got more like a technical trade on today because of the US holiday. And then you come into Friday. I'll cover that tomorrow. But, really makes for an explosive non-farm payrolls. We've obviously got the Canadian employment numbers there as well coming out Friday. But right now, great signs for trading coming up, right? This is what we've been waiting for. We've been waiting for the US numbers to roll over. We've been waiting for, the Fed to start talking about cutting rates. This is going to activate the global markets, start bringing in a dollar trend, and that's where the cash is. All right, guys, bit of an update, bit of a what's happening today sort of situation there. But just get your screens up, redo your charts, digest the information. This is exciting, and I reckon the start of the next big leg of the dollar down, right? Barring any geopolitical event. All right, guys, have a good one. All the best. Cheerio.